Good morning. Inflation and CRE. What investors must know. And inflation is no longer a background risk. It is a defining force shaping today's commercial real estate or CRE market. For investors and business owners, understanding how inflation impacts rents, expenses, cap rates, and financing is critical to protecting cash flow and long term value. And in this article, we break down what inflation really means for commercial real estate investors and how to position assets strategically in an inflationary environment. So, how does inflation impact commercial real estate? Well, inflation affects commercial real estate differently than it would residential real estate or equities. While higher prices increase operating costs, commercial assets offer built in inflation hedges when structured correctly. And key inflation impacts include the following: rising interest rates as well as tighter credit conditions, increased construction and replacement costs, higher operating expenses, so think insurance, your taxes, your payroll, and rent growth in supply constrained markets. Now, for disciplined investors, inflation can actually strengthen asset performance, but only with the right strategy. Rents, inflation's first line of defense. One of commercial real estate's strongest advantages is pricing power. In multifamily, retail, and industrial leases often reset annually. And triple net leases or NNN leases pass expenses directly to their tenants. Industrial and flex space benefit from supply shortages. And in growing markets like Houston, Katy, and Fulshire, population growth and limited new supply allows landlords to raise rents faster than inflation, which helps preserve real estate returns. And expenses rise. The structure matters. So inflation pushes all operating expenses higher, but not all assets can absorb this equally. And assets with expense reimbursement clauses, shorter lease terms with rent escalations, and also strong tenant credit will tend to outperform during inflationary cycles. And investors relying on fixed rents and full service gross leases often can feel the squeeze first. So, cap rates, valuations, and inflation pressure. Now, as inflation drives interest rates higher, cap rates often expand, especially for over leveraged or poorly underwritten assets. However, strong NOI growth can offset cap rate expansion, and assets with below market rents often reprice higher. And now, inflation is going to raise replacement costs, which supports existing asset values. And this is why location, your lease structure, and your tenant quality matter more than ever. This next segment is that financing strategy is critical. And inflation reshapes lending conditions. And here are a few things investors should focus on: long term fixed rate debt, conservative leverage, strong DSCR margins, and also lenders with flexible underwriting. Now, working with a commercial mortgage broker provides access to banks, debt funds, and non bank capital that can adapt faster than traditional lenders. So there's some value there. But commercial real estate in general as an inflation hedge is one of the main comments and concepts. And when it's done right, it works well. Commercial real estate remains one of the most effective inflation hedges when investors buy assets with rent growth potential, use smarter debt structures, and control expenses contractually. And it helps you focus on growth markets. Now, inflation is going to punish speculation, but rewards disciplined underwriting. And here's the final takeaway for CRE investors from this segment: inflation is not your enemy, and poor structure as well as weak underwriting are the real culprits. So, investors who understand how inflation impacts rents, expenses, and valuations, as well as financing, will continue to build wealth while others sit on the sidelines. Now, if you want to evaluate how inflation is impacting your current or future CRE investments, now is the time to have that conversation. And you can visit my website, Houston Real Estate Brokerage. There's some resources as well. You can schedule a consultation and we can chat more. Thank you for your time.